Okay, let's go gold here this morning. Let's do a quick video. I want to go over these setups. Okay, what you want to do, guys and gals, is you want to project your trades. I'll do a quick video here for you today. I'm on gold right now, and you want to project your trades ahead of time. We establish every Thursday that we know on gold that we have what? We have unemployment. Okay, and unemployment, we have numbers every Thursday at 8:30 that gold directly gets affected by that news at 8:30. So what we want to do is we want to trade based upon my number 1, my number 2, and my number 3 setups. What we did at 8:15, 8:20 this morning, when I got in the room on the mic, I established one thing. I looked at my 5-minute chart. And my 5-minute chart, that's the first thing you want to do when you first log in, is you want to look at that magenta moving average on the 5-minute chart. Every other chart means nothing to me. I don't care where the high value is. I don't care where the low value is. I don't care where anything's at. This main chart that has my 2 moving averages on is the first chart you're going to look at, because that's your main chart where you're going to establish your bias. Either we're going to be a net buyer or we're going to be a net seller. We're not going to be wishy-washy where a lot of these novice traders just buy and sell, not knowing what they're doing. We're going to pick the exact spot where we need to buy and sell based upon volume. And what we're going to do is we establish that the magenta moving average was up. And if it's angled up 35 to 45 degree angle, then we know one thing. We're only to be a net buyer. We're not going to short the market at all. Zero shorts. None. None. Zil. None. We're not going to be counter trend traders. Leave that scratch for all those counter trend traders out there that get washed out of the market typically within a year. Anybody that counter trend trades typically are washed out of the market within a year or so. Let them counter trend trade. We want to be with the professional money. We want to look for one thing. If the market's in an uptrend, we want to buy the dip. We want to buy a number 1 trade. What I said this morning at 8:15, 8:20 this morning is I want to be a buyer of 2 spots. A buyer number 1 here. So when we're resting here at 1402, around 1402, I said I want to be a buyer at 1391. Yes, it was over 100 ticks away. I'm going to tell you how you can project that. Then I said I want to be a buyer at 1382. At this, 1380 at this level down here at 1380. So there's 2 spots in the market at 8:25 before news came out. I said I want to be a buyer here, look to be a buyer here, and I want to be a buyer here. Now I want you to look at the reaction that the market did on both those levels. And you can project this stuff. This is almost 200 ticks away. This is over 100 ticks away. You can project these levels out 100 to 200 ticks away in a matter of a second logging in the room. Because what you're going to do is you're going to look at the order flow. The order flow is going to be predicated off these 2 5-minute charts. I got a big chart, that's my trend chart, and I got a chart down to the bottom left. And that's going to tell me exactly where possible order flow is being placed in the market. And the unique thing about that is that the reason this works so well, my number 1, number 2, number 3 setups, is because typically that's where all the stops are resting or all the buy or sell orders are resting. Meaning that's where volume is at. We want to trade where everybody's stop orders are at. Okay, just like the specialist was level 3, they know where the stop orders are at. They gravitate price towards the volume areas. Why? Because that's going to create order flow for their books. We want to do the same thing as day traders. We want to gravitate our trades towards these volume areas. So all you got to do is this. We look at the 5-minute chart. If it's in an uptrend, I want to buy LVA or hedge fund on the first pullback to it. So I established that the LVA right down here this morning at 8:15 was right there. If you look on the bottom left chart, it stopped at the most exact tick where my arrow's at, right over there. And that's our first buy bounce on the number 1 trade. Then I established my hedge fund, which caused a low, created the low, which was called out an hour ahead of time yesterday and 45 minutes ahead of time the day before. The hedge fund called the exact low and high. The hedge fund is these dashed green dash lines and red dash lines. As we said, we would be a buyer right there also. So if you look at the 2 spots in the market, they both bounced up heavily. Okay, then I said, all the way down here at 1382, what's the next setup? I saw the moving average cross down on my 5 minutes, so what I want to be a net seller. I want to take a number 3 trade short or a number 1 sell at the hedge fund. So I said all the way down here at 1382, we want to be a seller at what? At the hedge fund or the number 3 at 1393.30. This was 100 ticks away again. The market comes up, and what's it do? It stops right at my level. Why? Because that's where the volume is in the order flow. It stops right at 1393.30, right into a 1394 level. So what we do is what we do every day, guys, is we just do one thing. Is we establish where my number 1, number 2, number 3 setups are at based upon these 2 5-minute charts. And all we need to do is base our trades off these 5-minute charts, and we could do it an hour ahead of time, half an hour ahead of time. We got the advantage over everybody out there, period. Nobody knows this information like we have it in the room because we are trading where the volume is. We're trading where the possible order flow is. So we patiently wait. I made up these proprietary techniques. No one else trades market profile like this. Nobody. Nobody. Everybody makes market profile very, very difficult to understand. All I'm doing is showing you where high volume levels are at or low volume levels are at. High volume nodes, low volume nodes, also support and resistance. And then we put that into a methodology of a number 1, number 2, number 3 trade with overall trend direction. If trend is up, we're buying the first test of LVA or the hedge fund. If trend is down, we're selling the first test of HVA or the hedge fund. And that's it. We can use these rollers in the room for retest longs, retest shorts with trend. And we do that every day. So really all you need to learn is 2 setups in the room of market profile. The third setup will come after number 2 breaks down at LVA or HVA. And that's it. So you can see the rhythm of the market. All this stuff, 3 trades were 100 ticks away. Over 100 ticks, 100 ticks, 100 ticks, 100 ticks. And they both stopped the market in its tracks and reversed it. That's how we predicate our trades. So to become very diligent or very astute trader in the room is that you want to do one thing, is you want to learn about how to trade off these 2 5-minute charts because they will teach you where to buy and sell, the same areas to buy and sell. And we don't trade all this middle stuff. Where a lot of traders get smoked in the market is they're trading all this stuff in the middle. They're trying to buy and sell all in the middle. We just wait for number 1, number 2, 3 trade based upon the support and resistance levels to the bottom left. All right, everybody on the same page, guys and gals? Just give me a Y if we're on the same page. Everybody on the same page? We did have a number 2. Number 2 broke down through LVA at 1393 earlier. Everybody on the same page? 1, 2, 3 setups. That's all we're going to do. What I'm trying to get you good at, guys and gals, when I've been, like I did it today, and I did it yesterday, I did the day before. These trades were 100 ticks away. Yesterday were 60 tick away. The day before, 45, 50 ticks away. I'm trying to show you how to project this stuff way ahead of time so you're not a lagging trader. We don't want to be lagging traders, right? Just like the number 3 trade on Crude right now. Is that a qualified number 3 trade? Yes or no, guys and gals? Working on Crude. Yes or no? Is that a qualified number 3? Yes or no on Crude? Just give me a Y. Sure is. Gerald, go to Crude real quick. We'll shut this off. Here's the current trade we're in right now on Crude, number 3. Breakdown LVA, retest LVA. Short it. Why? More supply right at the top. Number 3 trade. All number 3 trade is a retest of LVA after it breaks. It's that simple. You just got to put this into a methodology. There's a number 3 test of order flow. Do we have more supply? Yep. Look at the lower indicators. Triple divergence. It's the best divergence you can get in the market. Look at all the supply. Price sets a higher high in a downtrend. Oscillator sets a lower low. That means there's more supply. These are supply-driven markets, not demand-driven markets. More supply brings the market down. There's your spinning top. I teach you to look for a spinning top right at the retest. Doesn't get any prettier than that. There's my spinning top. Look for a doji or spinning top for an indecision candle. Red reversal bar. You're good to go short. Right there. Number 3 trade.